So here with me today is CPA John Hartung to answer your questions in regards to seller financing, 1031s, or any other real estate tax questions that you submitted. And the first question we have is, obviously, what are the tax advantages that a seller could achieve when selling in an installment sale versus selling for all cash?
Primarily, it's tax savings and offering some tax planning strategies as well.
So how does depreciation recapture work when selling? And if we're dealing with an installment sale, how does that depreciation recapture work in that instance?
Now, Section 1250 refers to the property itself, the building. It gets up to the capital gain rate, but it's recaptured at ordinary rates up to 25%, and then it stops. And if we're talking about Section 1245 property, that's generally personal property. And that is recaptured in full in the year of the sale.
If we take depreciation is taken on investment properties, if it's added to the cost basis, and how is this calculated?
Basically, what that does is it reduces your basis, thus creating that gap between whatever your sale price may be down the road and the basis that you now have in order to figure out your gain.
So what documents will we need to show about the price that we purchased the property for and how much depreciation was claimed along that time of ownership?
I would hang on to the settlement statement for the purchase. I would also probably keep a digital copy.
Speaking of that, so the follow-up question to that was, do we need to save all the year's tax returns to show this? And I believe you already answered that.
I usually recommend that you save about 7 years of tax returns.
When does a 1031 exchange make sense? And what are the disadvantages to it?
It makes sense if you're looking to build a real estate portfolio in a relatively inexpensive way. You start with one property and you can exchange that one property for up to 3 more. The disadvantages are there's a lot of rules to follow, a lot of hoops to jump through, but they're definitely worth it. When you start adding on zeros to your transactions and they make them real money, there's definitely worth the trouble.
So I'm clear, 1031 exchange is really a tax deferral. So if I keep exchanging property A, B, C, and D, when I finally sell D, that's when I've got to pay all my taxes. And in the future, it could be at a higher tax rate, perhaps, than what I am now. Is that correct? Or
that's a possibility. Eventually, unless you pass away with all of these exchanges under your belt, you still have the property, but you pass away. Eventually, you're going to have to pay the tax bill if you sell the property, the final properties that you own. So yes, it's definitely a tax deferral.
Is there a better tax saving alternative to a 1031 when it's time to upgrade to a larger investment property?
There's really not a much better one than a 1031 exchange. Now, you can also look into things like self-directed IRAs where you can manage real estate within those, and then all your gains and stuff like that, or a majority of your gains, are going to be tax-free.
In your career, where do you see clients making their most costly mistakes or items not deducted when it comes time to do your taxes for real estate investing?
I think the biggest mistake is people operate out of fear. They don't want to get that notice in the mail that says, the return address says the Internal Revenue Service. And so they play it safe. They play it real conservative because they just don't want to rock the boat. But the laws are there and the rules are there. And if you can substantiate your position, you're entitled to it. So don't be afraid. Don't let them intimidate you because they might send you a letter. Some of the deductions that I think people overlook, mileage, I think, is one. They don't want to keep a mileage log. But if you own 25 rental properties and you visit each one once or twice a month to check on it and stuff like that, well, that's mileage you could be deducting.
Well, thanks so much for joining, John. And, I've got a lot of followers asking, how do they get in touch with you?
The best way to get in touch with me is my email address is John, John, at kingdomtaxgroup.com. My phone number also is 303-350-7670. You'll probably end up getting my voicemail, but I will return your call. And that's also my cell phone, so you can text me as well. If you do text me, just let me know what your name is and that you found me through this video so that I know who you are. I'm happy to help and happy to answer any questions you might have.